Welcome traders to this analysis of gold. My name is Vic. Thanks for joining me in this analysis. Now, this is not going to be a full-fledged analysis because if you have been following me on my channels, then you might have seen my previous analysis, which was in-depth analysis of gold, and that actually started to show its signs already. So, if you haven't actually checked out that analysis, you can go and check it out. But the main thing is that market has come to this particular zone, which is a high probability confluence zone, and that means that we are expecting some reaction here. Now, that doesn't mean that it's going to be complete reversal. What we are expecting market to do is actually give us a little bit of correction. And if it starts to correct a little bit and it starts to go back again into this zone or a little bit higher, let's say towards 2080 or 2100 level, then we might get another divergence kind of setup. So that's one possibility. Another possibility is that this current month will completely turn into a bearish candle or even go further down to like 1920 or 1920 level before it starts to move higher. So what we can do is, if we draw Fibonacci on here, this is 23.6 Fibonacci level. So this is where we are expecting market to move to ultimately, and then come down to near about 1690 level, because we need, actually it should be 1724 now, because the market got a little bit overstretched right there. However, these are very good levels for market to come and give us a reaction, some kind of correction in here. So that's what we are waiting for. If I go to the weekly time frame, we can see that market is overstretched, and on Friday we started to see a little bit of sell off post NFP, but we were expecting it anyway because of this overstretching and because of this high probability zone in there. On the daily time frame, we can see that a nice engulfing candle has formed, and there was a previous weakness around here as well. So if I bring in RSI, we can see that market was kind of giving a little bit of divergence there. RSI was nearly the same, but the market moved higher and resulting in this. So this has become an engulfing candle, and I'm expecting market to actually keep on going down a little bit before start to move upwards. But because this market has been very trending, it has been highly trending, so we have to be careful. We cannot just jump into a trade like this. If you're if you're building positions, then you might have taken a trade right there, and but you do not, you must not risk too much around here unless you got a proper confirmation. One thing that you will find very interesting on 4 hour time frame is that when it started from here, its journey started from 1800, the mid of the Bollinger Band, which is this line, right? That was never crossed. Around here, it market tried, got pushed up. It tried again. It actually closed below that mid of the Bollinger Band, but then there was turned out to be fake breakout. Now tried again. There were so many attempts around here, but it never actually broke through that mid of the Bollinger Band. This is the first time it has actually broken through the mid of the Bollinger Band, and it has closed below. And so far, the retest has not been able to close above it. So that actually gives us a very good bearish sign. But as I said, this is a still in bullish momentum, so there could be move a little bit higher into, let's say, 2050 kind of level. If that happens, then we can look for a short opportunity. If it actually goes higher, and if we find that on, let's say, monthly time frame, to, let's say, if it goes down and then starts to create a divergence kind of setup, then we'll have to wait for that. But on 4 hour time frame, if you want to play it for day trade, or if you want to play it for if you're building positions into this market, then this could be 2050 could be a good level. Because if I go to the 1 hour time frame, what I see is that it came in right into this water cluster and then started to move upwards, and that went very nicely. There was head and shoulders pattern that I reported, and that's why the market actually fell right into that level. And now, because the market is trying to go upwards a little bit, it may come into this mid of the Bollinger Band. So if I draw fib on here, this coincides nicely with 61.8 Fibonacci level, which is 2050 level, as I said. So far it has not been able to reach 38.2. So next week, as soon as the market opens, it will try to regain some of its lost ground. It may go to 38.2. It may all the way come back to 61.8 as well. And we will be watching, because this now has become a resistance in the market 2050 level. So if the market actually shows as a good confirmation, then we can look for a short position in this market. So far, this is the first sign that we can see in terms of, like, bearish momentum, sorry, bearish. This is the first time which is actually bearish in any sense. What we know, what we need to see is that, for the next 2 days, if another day is turning out to be a bearish candle, and if that bearish candle closes below the low of the previous one, then we can expect most of the week next week to be bearish as well. But we'll have to see how the market opens and how the first day of the next week turns out to be. So this is my analysis on gold. It's not like proper analysis. It is more of an update. Hope you enjoyed this. Hope you found this useful. If you did, hit the like button. In the comment section, let me know what you think about this analysis and what is your opinion on gold. And do not forget to subscribe to my channel as well. Thank you.